So we're going to answer some questions in PGPP. I'm planning to answer some 10 quick random questions. So that is one.
But the screen is zoomed.
Okay, so some random questions we will work out. As many questions as possible, we'll work out. Question number 1. Rahul engaged in manufacture of chemicals. Furnishes the following particulars of his manufacturing unit. Opening WDV, machine purchased in August, purchased in September and put to use in January, old machine sold. Compute depreciation. Friends, whenever you find the word manufacture, remember to do additional depreciation also, and also ensure that it is not a concessional regime question. If it is concessional regime question, then only normal depreciation. Okay, quickly work out. Put to use for less than 180 days. Okay, if date of usage is provided, then only consider that date. Okay, if usage date is given, please consider that date only. Normal depreciation, please understand. Okay, 4 lakhs into 7.5% plus 23 lakhs minus 4 lakhs into 15%. Normal depreciation, 4 lakhs into 7.5%, 19 lakhs into 15%. Additional is 10 lakh into 20% plus 4 lakh into 10%. Additional is only for additions made during the year. So if you end it with a note that if you are following normal system, you can go for additional depreciation of another 10% in the next year, because this year you have claimed only 10%. The balance 10% can be claimed in the next year. Question number 2. Mr. Fuchs runs a sole proprietary firm and owns 4 machines which were put to use in March 2023. The depreciation on these machines is charged at 15%. The written down value as on this year is 770. 2 of the machines were sold for 10 lakh. A second hand machinery was purchased for 6 lakh 10,000 on 30th. Further, Mr. Fuchs furnished the following particulars relating to payment made and expenditure incurred towards scientific research: payment to an approved university, payment to a college. Compute the following: claim of depreciation, capital gains liable to tax, deduction under 35 if he has shifted out of default tax regime. Depreciation, okay, whatever into 7.5%. Whatever is the value into 7.5%, because the new purchased asset is 610, whereas the balance available for depreciation is only 380. Okay, note, okay, capital gain will arise only if the block cease to exist, that is goes out of existence. In this case, balance is still available in the block, so no capital gains. Okay. Any contribution to scientific research association or institution is not allowed where the assessee is under default tax regime. In the given question, assessee has opted out of it, right? Okay, assessee has opted out of it. Payment to payment to UV University approved 15 lakhs. Payment to Satyavati College. Since the word approved is not there, it is assumed as not approved, hence no deduction. So turnover is less than 2 crores. So I can 12 lakh 12,400, 6% plus 8%. What happens here is 1525. So it is more beneficial. Suppose this has come to 10 lakhs. Then assessee has either he has to declare 10 lakh, 12 lakh, 12,000, or if he want to declare 10 lakh, he has to maintain books and get them audited. Okay. But remember, if it is 12,400, all expenses are deemed to have been claimed. You cannot claim any other expenditure except business loss. Even unabsorbed depreciation, you cannot claim. Specify the disallowances. Friends, again and again, disallowance is going to be the question in the main. So let's be very clear about it. Okay. TDS default. What is TDS default? Either tax has not been deducted before 31st March or not remitted on or before due date of filing returns is known as default. 30% of the expenditure will be disallowed / 100% if the payment is to non-resident. The disallowed expenditure will be allowed in the year of actual payment. Is that clear? The disallowed expenditure will be allowed in the year of actual payment. This is 40A funds. Statutory payments, section 43B. Statutory payments, section 43B. Okay. What are all the statutory payments? There are 6 types. Let's leave MSME for a minute. There are 6 things. 3 to the government. Any taxes duty, employer contribution to Provident Fund, and payment to Indian Railways for using their assets. 2 to the employees, bonus or commission, leave encashment. And 1 to financial institutions and banks, interest. These 6 are known as statutory dues, or statutory payments. Taxes duty, employer contribution to Provident Fund, payment to Indian Railways for using their asset, bonus commission, leave encashment, and interest payable to bank and financial institution. Where it is outstanding, where it is outstanding at the end of the year, then the same will be allowed as deduction only if it is paid on or before due date of filing returns. Where it is paid after due date, then disallowed in the year of incurrence and allowed in the year of payment. May I? Yeah. Okay. So what happens is I'll upload the Excel file also to you. Okay. So that theory, you just make a small marking. This is not going to be a question. I just want to prepare you for the main question. If they ask these things outstanding, if you find it, you have to see the date of payment. If it is paid within the due date, file. Suppose last year's paid in the current year, allow the deduction. Like that, you have to capture in your mind. Okay. Anyhow, the Excel sheet I'm going to upload to you, and I will directly send it to you today also after the end of the class, so that you need not take down the full theory. You can read it from the Excel sheet also. Okay. Payment otherwise than by approved modes. Section 40A subsection 3. This remember 40A subsection 3. If payment made on a single day to a particular person exceeds 10,000, wholly disallowed. Are you clear? wholly disallowed. If it is to a person on a single day by otherwise than by approved mode, wholly disallowed. Okay, never it will be allowed. Remember, for resident transport operator, limit is 35,000. Okay, agriculturist, fishermen, and employees away for work on site can be paid, and there will be no disallowance. Payment made to section 40A subsection 2. Payment made to relatives. Okay, payment made to relatives. Any payment in excess of FMV. Okay, what will be disallowed? Such excess will be disallowed, not fully. Such excess will be disallowed. Okay, MSME, friends. Friends, one thing we have to remember, it should be outstanding as on 31st March, then only the provision. Within the same year, there might be some discrepancies. Don't worry about that. Only if it is outstanding at the end of the year. Where it is outstanding at the end of the year. Okay, where it is outstanding at the end of the year. Agreement is not there, payment should be made within 15 days, else disallowed in the year of expenditure and allowed in the year of payment. There is no agreement. Within 15 days, you should have paid the amount. Suppose I purchase it on March 20th. April 5th, you should have paid on or before. Otherwise, even if you pay on April 10th, I will disallow it in 24-25 and allow it in the financial year 25-26, where there is no agreement, okay, within 15 days. Where there is agreement, payment should be made Am I clear? Okay. Employers and employees contribution to PF. Employers and employees contribution to PF. What is this? Employers contribution. Employers contribution. Okay. This is covered under 43B. We all know. If it is outstanding, it will be allowed only if paid within due date of filing. Else disallowed and allowed in the year of payment. Employer's contribution is very clear. Statutory due, it should be paid within October 31st or July 31st as the case may be. Else it will be disallowed and allowed only in the year in which actual payment is made. But interesting is this, employees contribution. Every month it should be paid within the due date of respective law, PF law, within 15th of the next month, sometimes 10th. If nowadays they are reducing it to 10th. Okay, every month, not at the end of the year. Every month it has to be paid within the due date of the respective law. Where it is not paid, disallowed in the year of, where it is not paid, then treated as income, no deduction at the time of payment. May I? May I? May I? May I? C.A. Niranjana, a resident individual, aged 60 years, is running an office of accounting and consulting. Her income and expenditure on the credit side, consultancy and income tax appeal put together exceeds 50 lakhs. Very interesting question. Dividend from units of UTI taxable under IFOS. Office expenses, staff, stationery, rent paid, amount paid to specific research association, interest on loan taken for setting up office. Rent paid includes 15,000 rent for a residential house, disallowed. Depreciation as per IT law. Here there is no depreciation. Okay, directly given. Interest on loan for taken for establishment remains to be paid. 43B disallowance. 43B disallowance. Interest should be paid within the due date of filing returns. It is not paid. Okay. Due to emergency requirement, 1 month rent was paid by bearer check to the owner. Disallowed 40A3. Office expenses include 120 paid without deducting tax. Staff salary includes maid to her brother 20,000. Similar qualified person is only earning 17,000. Also bonus 20,000, which was unable to be paid and reversed in October 28. No boss 43B. I will not allow it. All receipts are by account payee check except one client who paid 250. From the above, compute income from profession if she decides to maintain book. Is she eligible for presumptive computation? If says, identify the income. If in information H, the cash received is 5 lakh, what will be the impact? Read through. First, let's go by maintaining books. Shall we start? Shall we start, friends? Okay, right. Office expenses. In the question, it has been said that office expenses includes 120 paid without deducting tax at source. 30% of office expenses of 1,20,000 for which tax is not deducted at source. Staff salary 9,80,000. There are two information which are given. One, 40A2 the disallowance, payment to relative. There was a relative who is part of staff, 20,000, whereas the fair market value is only 17,000. Another is staff salary includes bonus of 20,000, which was not paid. Staff salary includes bonus of 20,000, which was paid, which was not paid. Is that correct? Yeah. That is not our problem. That is next year they have reversed, but we have to disallow this year itself. Okay. Staff salary to brother, which is in excess of FMB, shall be disallowed under section 40A subsection 2. How much is paid excess? 3,000, right? Rent for residential portion. How much is that? Rent for 15,000 per month. Excellent mathematical knowledge. Okay. 1,80,000. And now please understand. All of us are understanding this. Disallowance under section 40A subsection 3. 1 month of his rent paid by otherwise than by approved modes. How much is the office rent? What is the total rent? 9 lakhs. Of this, 1,80,000 pertains to domestic area divided by 12. 7,20,000 divided by 12. You are all understanding? Okay. In an examination tension, we should not put 9 lakh by 12. It is only because of that 1,80,000 is for residential area. So remaining only. Shall I? Now I'm going to part B of the question. Okay. Compute professional income if he decides the issue eligibility for presumptive computation. Professional income. Okay. How much is consultancy receipts? How much is consultancy receipts? 38, 85, 815. Okay. Appeal representation 15,00450. So this exceeds 50 lakhs. Exceeds 50 lakhs. Normally tax audit under 44AB. Please wait. Okay. Receipt otherwise than by approved modes is 2,50,000. Is 2,50,000. Receipt otherwise than by H information, except one client who paid in cash, 2,50,000. Percentage of receipt otherwise than by approved modes to total receipt. That is 2.50 divided by 53.86 into 100. How much is that? 4.64 percentage. Okay. So receipt otherwise than by approved modes has not exceeded 5%. Hence, assessee can opt for presumptive computation as the limit will be, okay, 75 lakhs. Okay, if the gross receipt, if the receipt otherwise done by approved mode does not exceed 5% of total receipt, then I can go. In 44 AD, 2 crores to 3 crores. Here it is 50 lakhs to 75 lakhs. Any doubt? Any doubt? Okay. In which case, the income will be, okay, 53 lakh 86,300 into 50%. Actually, maintaining book, this is lesser. Yeah. May I? May I? Question number 6. Okay, it's also a material question. The following is the receipts and payments, and he is maintaining books on cash basis. Okay, what are all the receipts? Consultancy receipt, both here I should take if they are maintaining cash basis. Visiting fees, loan from bank is not an income. Sale of medicine, gift and presents from patients or professional income. Okay, any benefit or perquisite received in carrying on business or profession is also professional receipt. Gift from friends, IFOS. Dividend, IFOS. Interest from government securities, IFOS. Rent from letting out of house, IHP. Rent of clinic, expenditure. Water and electricity bill, expenditure. Professional books, depreciation. Household expenses not allowed. Collection charges of dividend never allowed. Motor car, surgical equipment, everything is depreciation. Income tax, okay, not an expenditure. Salary to staff, life insurance premium, 80C. Gift to daughter, not no nothing. Interest on loan, car expenses, purchase of medicine, municipal taxes for house property, interest on loan taken for house property. Compute the following. Compute the total income. Okay, we'll do the total income. Books, 40% was purchased in 15 and balance on 5th. Car purchased in Jan. Surgical equipment in September. 1/3 of the car is used for personal purposes. Opening and closing stock of medicine. Did not own any asset in the opening. All the assets were acquired during the year. He has an house property of which 50% of the floor area is let out and the balance 50% is self-occupied. So out of the municipal taxes, only 50% will be allowed. Out of the interest will be split into two. 2,70,000 for let out portion, 2,70,000 for self-occupied portion. He is opting for default tax regime. The let out portion, he cannot claim the interest. For the let out portion, he cannot claim the interest. Am I clear? Am I clear? I'm going to start the working. We'll leave some half a page and start. First, headwise we will go. First, we will do house property. Then we will do business or profession. Then we will consolidate IFOS. Anyhow, 80C and all, he cannot claim it. It's a working note. Rent received is 6 lakhs less MT paid 50% for let out area standard deduction under section 24A 30% of NAV. Interest on borrowed capital 50% for let out area. Shall I go for professional income? Income consultancy fees 1149 plus 3135 visiting fees please say. Sir, the screen is blur. Is it for everyone? Is it for everyone? The screen is blur. Jessica?
Yes, sir.
Yes.
A minute. Rent 84,800 plus 4,80,000. Salary to staff 2,55,000. Salary to staff 2,55,000. Life is interest on loan 2,11,000. 2/3 of the car expenses. 2/3 of car expenses. That is 3,30,000 into 2/3 because 1/3 of the car is used for personal purposes. So only 2/3. Consumption of medicine opening plus purchases minus closing. Okay, consumption of medicine 60 plus 2,40,000 minus 18,000 minus 18,000. Am I clear? Am I clear? Right. Now I'm working out depreciation. I'm working out depreciation. The question says 2,50,000 books were purchased in the first half and the remaining in the second half. Okay, 2 lakh of books, 2,50,000 into 40% plus 90,000 into 20%. Is that correct? Is that correct? Okay, 250 is purchased in the first half and the remaining 90,000 in the second half. Books. And after books, car 15%, but it is purchased in the second half of the year, that is 1/1. So what is the value of car? Motor car 14,30,000. Car 14,30,000 into 7.5% less than 180 days, and remember into 2/3, because 1/3 of the car is used for personal purpose. 1/3 of the car is used for personal purpose. Car, surgical equipment, directly 15%. ஐஸ் இல்லாம ஏதாவது ஐஸ் இல்லாம இளநீர் இந்த yeah. Are you clear? Are you clear? Okay. Is this clear to you? I'll do the IFOS part. Gift from friends. So exceeds the threshold, 66,000. Dividend, collection charges are not allowed. 70,000. Interest on securities. 27,000. May I? In your main answer, computation of total income, in your main answer. Clear? Okay, so strategize the question. Headwise, break the question into smaller parts. Never see the question as one larger form. Break it into smaller. Always do that. Every total income question, as we do, you will understand. break it down into smaller parts, you will be able to easily crack it. Or if at all you are doing a mistake, 1 or 2 mistakes maximum. But if you don't break it full, if you're taking it as full, then so always the main answer shorter. Everything let it be in the working note. Shall we? Okay. This is a very interesting question. Before going into this question, I will talk about alternative minimum tax, which is applicable for non-corporate assessees. In 3 cases, you have to work out AMT. If assessee is claiming 35 AD, if assessee is claiming 10 AA, okay, if assessee is claiming 80 I to, okay, something like, leave the last part, 35 AD or 10 AA. 35 AD, specified business deduction. 10 AA, export profit. Okay, 100% for the first 5 years, 50% for the next 5 years, another 50% if you transfer to reserve. Export profit is equal to total profit into ET by TT, export turnover by total turnover. Okay, on this we will be working out a couple of questions also. So whenever 35 AD 10 AA comes in the question paper, be sure they are asking AMT, unless they say ignore AMT. Okay, now Mr. A commenced the business of operation of the business of setting up warehousing facility for food grain, 35 AD, it's not 34, sugar and edible oil. He incurred capital expenditure of 80, 60, 50 on purchase of land and building in the financial year 23-24 and capitalized. The cost of land included are 50, 40, 30. So building cost will be, because land will not be allowed, 80 minus 50, 30, 60 minus 40, 20, 50 minus 30, building cost will be these things. Okay. During the previous year, he incurred capital expenditure of 20 lakhs, 15, 10 respectively for the extension. Compute the income under the head PGBP for the assessment year and loss card to be carried forward, assuming that Mr. A has fulfilled all the condition and wants to claim deduction under 35 AD and has not claimed any other expenditure. The profit from the business of setting out of warehousing before charging 35 AD or depreciation is 16, 14 and 31. Also assume in respect of the expenditure, everything is by ECS. Compute the tax payable. Read through. Same way, leave 3/4 of the side, 3/4 of the side. Okay, what happened? Expenses incurred in 2023-24 other than cost of land. I told you cost of land is not allowed other than cost of land. 30, 20, 20. Okay, 30 lakhs, 20 lakhs, 20 lakhs. Expenses incurred in 24-25 20 lakhs, 15 lakhs, please understand, treatment allowed under 35 AD, allowed under 35 AD, only depreciation at the rate of 10%. May I? May I? Okay, come to the main answer. Or continue as it is if you have not taken it as a working note. Computation of total income. Income before claiming 35 AD. Income before claiming 35 AD our depreciation is 16 lakhs, 14 lakhs, 31 lakhs. Okay, before claiming 35 AD or 32. Less expenditure under 35 AD is 50 lakhs, 35 lakhs. Less depreciation under section 32 is 3 lakhs. Loss of specified business. Please understand, this cannot be set off against edible business. Loss of specified business can only be carried forward and set off against income from specified business. Loss of specified business, my dear friends, cannot be set off against edible business. Income taxable is just 28 lakhs. Income taxable is only 28 lakhs. Any loss of specified business, speculation business can be set off only against that income. Can be set off only against that income. It cannot be having a cross set off. Okay, whereas income from edible oil is separately taxable. Even though there is a loss to the extent of 55 lakhs, I cannot set it off against the income from edible business. Okay. Sorry. Are you understanding? Are you understanding? So 28 lakhs. Now for the same question, I am going to do AMT. For the same question, I am going to do AMT. Computation of adjusted total income. Total income as per normal provisions 28 lakhs. Is that right? Total income as per normal provision 28 lakhs. Add capital expenditure on specified business. Look at this. This 50 plus 35, which we have claimed. 50 plus 35, 85. Less depreciation at the rate of 10% because it is a warehouse. It is a warehouse at the rate of 10% on such capital expenditure. Whenever we are claiming 35 AD, if they say do taxation, please remember to do AMT. Unless they say ignore AMT. Please don't forget to do AMT. Base tax on 28 lakhs. Okay. On 28 lakhs. 28 lakhs minus, is there a default 6 tax system or normal tax system as they given? Is the question given? Okay, I'll do normal tax. 10 lakhs into 30% plus 1,12,500. %. Am I clear? Am I clear? Any doubts, please ask me. Any doubts? Okay, very rare question. I want to ensure that if you remember 35 AD, you should immediately come to AMT. That's what I'm telling in your mind. 35 AD, you know, all capital expenditure except land, goodwill, and financial instruments are allowed. But if you do a 35 AD question, always remember to immediately think of AMT. Similarly, 10 AA also. Am I clear to you? Okay. Mr. Amit, having a business of manufacture of furniture, gives the following: sales, closing stock, income tax refund is not a business expenditure income. Probably if there is an interest portion, that will come in IFOS. Okay. Warehousing charges, be sure it's 35 AD. Agriculture, sugar, like that. Opening, purchases, freight, bonus, rent, advertisement, bad debts, interest, depreciation, a GST, salary, miscellaneous expenses. Income tax refund includes interest. Salary includes 30,000 paid to his brother, which is unreasonable to the extent of 5,000. Advertisement include 2,000 paid, 500 paid for the political party. Miscellaneous expenditure include 1 lakh paid to political party. GST demands include 5,300 penalty. Penalty only is disallowed. Interest is allowed. Penalty only is disallowed. Mr. Amit had purchased a building for 20 lakhs in the warehouse for the purpose of agriculture produce. This was made available for use and the income from the activity is credited. This is what is that 35 AD. Depreciation under income tax law. Interest on loan includes 80,000 paid to Mohit, a resident on which tax has not been deducted. Compute the total income and the tax liability in the best manner. Simple question, very simple. Let's complete this also. We have some time. First, we will do leave half a side, leave 3/4 of a side, because we are doing to do AMT also. Leave 3/4 of the side. Computation of business income. Computation of business income. Okay, net profit. Purchases, freight, cartage, bonus to staff, rent. Any adjustment is there? Adjustments are there for salary, advertisement, miscellaneous, GST. That's all right. Depreciation, interest. Okay. Bonus to staff, rent of premises. Okay. No adjustment for rent also. Advertisement in the publication of political party. Not allowed, my dear friends. Not allowed. 37, that is not allowed. 2,500. 2,500. Bad debts, okay. Interest on loan. One of the adjustments says interest on loan includes 80,000 where tax is not deducted at source. 30% of interest of rupees 80,000 on which tax is not deducted at source. So 80,000 into 30%. 80,000 into 30%. Depreciation add back. GST penalty paid. Interest is allowed. Only penalty is disallowed. Interest is allowed. Only penalty is disallowed. 5,300. Salary to relative in excess of FMB. How much is that? In excess of FMB. The information 30,000 paid to other, which is unreasonable to the extent of 5,000. Which is unreasonable to the extent of 5,000. Miscellaneous expenses. Okay. Donation to political party, 1 lakh. Miscellaneous expenditures. Donation to political party, 1 lakh. So, okay, this is over, this is over, this is over, this is over, this is over. Okay. So, less non-business income. Income tax refund. Income tax refund 30,000. Warehousing charges. Warehousing charges 22,50,000. Business, general business income. No, I didn't receive, sorry, I didn't deduct depreciation. Less depreciation as per IT law. 65,000. Am I clear? Am I clear? GST 5,300 penalty, 12,750 interest. Interest is not allowed. I mean, interest is allowed. Only penalty is disallowed. The penalty 12,750 is interest. Interest is allowed. Interest is allowed. Only penalty is disallowed. Go to the main answer. Go to the main answer. Roman 1, normal business as computed. Roman 2, specified business. Rental income from warehouse. Rental income from warehouse 22 lakh 50,000 less construct. Less purchase of warehouse 20 lakhs. Interest on income tax refund. On 15/7, so more than 180 days. I'll do that. You cannot, in default also, you cannot claim 35 AD. So normal will be better whenever 35 AD is there. Because you cannot claim 35 AD, you will not be able to claim 80 deductions. So 35, but I'll work out and show you. Don't worry. Computation of income and tax if assessee follows default tax regime. Total income under normal regime. My dear friends, total income under normal regime, this much. Add 80 GGC, which I cannot claim. 1,02,500. Add 35 AD expenditure, which we cannot claim, 20 lakhs. Am I clear? Is that correct? 20 lakhs I cannot claim. I cannot claim 20 lakhs. Of course, yes, depreciation I can claim. So my total income under 115 BAC will be this much. Okay, 50. Okay, that's why I said we need not. Surcharge will come 50 lakhs. Whereas in our normals, whenever 35 AD is there, it's only better to go by AMT. That's why they have said most beneficial. AMT is most beneficial because you'll get a tax credit also. I wind up that today's class here. Next class, Sunday morning, 6 o'clock. Next revision session, Sunday morning, 6 o'clock, where we will complete the whole lot. And I will have additional one class that you can attend online also, I don't mind, only for MCQs. Only for MCQs, I'll have an additional session. Okay, all the best, friends. Namaste. Good morning. So we left with the question number 27, I believe. 28. We completed 28, right? Yeah, we completed 28. We completed 28 of PGBP. So we have a very high reasonable idea about PGBP. I am moving on to question number 29. I'm moving on to question number 29. In page number 33, question number 29. Mr. Ayush, a resident individual aged 54 years, is engaged in the manufacture of textiles, earned a net profit of 82,45,000 after debiting or crediting the following. Debits include depreciation, STCG on sale of on transfer of listed shares on which STT is paid. This should have been credit. Refund of income tax, which includes interest. Dividend from Indian company. Dividend received from each company is less than 5,000. Did we do this question? Did we do this question? No, right? Okay. Ayush installed new plant and machinery for 65 lakhs on 110, which was put to use on 11. Depreciation, including additional depreciation, is included in the depreciation debited in the P&L account, which has been computed as per income tax law. Mr. Ayush took a loan from SBI 50 lakhs at 10.5% to purchase such plant and machinery. Total interest up to 31.3 has been paid on 31.3 and the same is debited to P&L account. Advance tax paid during the year. Ayush purchased goods for 40 lakhs from Mr. Ram, his brother. The market value of such goods is 35 lakhs. He paid 40,000 life insurance premium taken on the life of his married daughter who is not dependent on him. The sum assured is 5 lakhs and the policy was taken after 2012. He paid 45,000 towards health insurance of himself and his spouse. On 1/7/24, Ayush withdrew 1.5 crores in cash from 3 current accounts maintained with SBI. There are no other withdrawal during the year. He regularly files a return. You are required to compute the total income and tax payable, assuming he has opted out of default tax regime. Assuming he has opted out of, so he is following the normal tax regime. We need to compute the total income and tax payable. Read through. My dear friends, leave half aside. Leave half aside. That is for your main answer. We will do the working notes. I actually leave 3/4 of the sides because you have heads of income, deductions also. Okay, because he is opted out of default tax regime, he can claim deduction and the computation of tax also. So kindly leave those things, leave that sufficient space and come to the solution. I am first taking up the working note for computing business income. add. Okay. Depreciation, they have said it is as per the IT law. Okay. I want to invite your attention to a particular adjustment which is important in this question. Okay. Mr. Ayush installed a new plant and machinery on 1/10/24, which was put to use only on 1/1/25. 1/1/25. Depreciation, including additional depreciation on this 65 lakhs, is included in the depreciation debited in the profit and loss account, which is computed as per the income tax law. So no problem. No problem. We need not add and reduce depreciation, but it is as per the income tax law, as per the IT law. But look at the next adjustment, which is what is very important adjustment. Mr. Ayush took a loan from State Bank of India, 50 lakhs on 1/9/24 at 10.5% for purchase of machine. The total interest has been paid on 31/3 and the same has been debited to profit and loss account. There is one thing which we have to understand. Interest till the date of putting the asset into use. Interest till the date of putting the asset into use should be capitalized. Once more repeating, interest till the date of putting the asset into use should be capitalized. That is, you can see date of loan is 1st September. Date of putting the asset into use is 1st of January. 1st of January. So, up to September, October, November, December. Okay. Hence, 4 months interest needs to be added to the cost of the asset. That is, how much is that? 50 lakhs into 10.5% into 4/12. Okay. This should be disallowed as expenditure. Okay. So what happens is 50 lakhs into 10.5% into 4/12. This needs to be added back to the cost of the asset. This needs to be added back to the cost of the asset. Is the class understanding? Okay. See, any depreciation, any interest up to the date of putting the asset into use. In fact, any expenses up to the date of putting the asset into use should be capitalized. Should be capitalized. Okay. And then I have some other information also. That is, Mr. Ayush purchased goods 40 lakhs from Mr. Ram, his brother. The market value of the goods is 35 lakhs. The market value of the goods is 35 lakhs. Okay. 40A2 disallowance. Payment to a relative in excess of fair market value. In excess of fair market value is 40, how much is that? 5 lakhs. 5 lakhs. Is the class clear? Okay. Okay. Less non-business income. Less non-business income. STCG on which STT is paid. STCG on which STT is paid. Okay. Taxable under capital gains. Taxable under capital gains is minus 10 lakhs. Is minus 10 lakhs. Okay. Income tax refund. Income tax refund minus 15,550. income tax refund minus 15,550. Dividend income from Indian companies 15 lakhs. Dividend income taxable under IFOS 15 lakhs. 15 lakhs. Okay. Okay. So this is over. This adjustment 1, 2 is over. 3 is over. This is for ATC. Okay, there is an advance tax also, which we will consider while doing tax. This is for ATD. This is for TDS. Okay, so now please understand. Please understand. Depreciation on interest, exactly, on interest part added to cost of asset. Why? Because they said that they have charged a depreciation on 65 lakhs. Now I am adding the cost of asset by 1,75,000. Now I am adding the cost of asset by 1,75,000. Okay, so normal depreciation 1,75,000 into 7.5%. Normal depreciation into 7.5%. Additional depreciation 1,75,000 into 10%, because put to use for less than 180 days, I'm only charging, okay, is it clear? Is it clear, friends? Okay. Now I am going to computation of total income. Main answer, in your main answer, computation of total income. In our main answer, computation of total income. Business or profession as computed, I am getting 63,73,825. Capital gains, okay, STCG on which STT is paid, taxable under 111A. We all know it is 10 lakhs. Other sources, my dear friends, other sources, you can see dividend income, okay, dividend income of 15 lakhs and interest on income tax refund. Interest on income tax refund. He received income tax of which interest included is 4550. 4550 gross total income. Deduction under chapter 6A. Okay, Now I want you to invite your attention on this. He paid 40,000 as premium on the life of married daughter who is not dependent on him. You can claim. 80C is a section which is available for assessee, spouse, and children. Nowhere the word dependent appears. Nowhere the word dependent children appears. Even if the children are not dependent, if the assessee is paying the premium, you can claim. And the sum assured is 5 lakhs, so less than 10% only. Less than 10% only, so you can fully claim. Okay, life insurance premium on the life of daughter need not be dependent. Section 80C. And then 80D, paid 45,000 towards health insurance policy, himself, spouse, and children. 80D, health insurance premium. Okay, on health of assessee, spouse, and children. Here, even though I am paying 45,000, the maximum I can claim is 25,000. Restricted to, I don't think assessee is a senior citizen. No, he is aged 54 years. So restricted to 25,000. Restricted to 25,000. So total income rounded off also. Okay, friends. Okay, now computation of tax. Computation of tax. Okay, it is under normal tax regime. It is under normal tax regime. STCG, on which STT is paid, taxable at 20%, assumed it arises on or after 23rd July 24. They have not given the date, right? No, it is not given. So we make the assumption. So that is 10 lakhs, which is taxable at 20%. Which is taxable at 20%. Okay. Income taxable at normal rates. Income taxable at normal rates will be 78 lakh 13,380, 13,380. This minus 10 lakhs into 30% plus 1,12,500. Okay, okay, 78 lakh up to 10 lakhs, 1,12,500. Remaining 68 lakh, 13,380 into 30%. Okay, this is my base tax. This is my base tax. Add surcharge. Remember, income has exceeded 50 lakhs, surcharge at 10%. And HEC at 4%. Total tax. Total tax. Is the class clear? Is the class clear, friends? Are you clear? Okay. Less advance tax paid. How much is the advance tax paid? How much is the advance tax paid? 17 lakhs 50,000. 17 lakhs 50,000. I want the class to understand something. I want the class to understand something. Depreciation over, etc. Dividend from Indian companies. Dividend received per company is less than 5 lakhs. So they would not have deducted tax at source. They would not have deducted tax at source because it is less than 5,000. 5,000 is section 194 says, okay, 5,000 as the limitation. Since it has not exceeded the threshold, no TDS there. No TDS there. But when I go down, I have one information. He withdrew 1.5 crores in cash. Okay, he has been regularly filing return. Section 194N, cash withdrawal. Section 194N, cash withdrawal. Any withdrawal in excess of 1 crore, 2% of such excess is the TDS. 2% of such excess is the TDS. Less TDS. Section 194, TDS on dividend will not be there, as dividend per company has not exceeded rupees 5,000, and dividend per company has not exceeded rupees 5,000. Okay, dividend per company has not exceeded rupees 5,000. Okay, okay, and that being the threshold. TDS under section 194N. Okay, on cash withdrawals. 2% on the withdrawals exceeding rupees 1 crore. So 50 lakhs into 2%. Balance tax payable. Are you clear? Question number 30. Mr. Ravi and Sons, a partnership firm consisting of two partners, reports a net profit of 7,50,000 before deduction of the following items. Salary rupees 25,000 payable to two working partners of the firm as authorized by the deed. Depreciation on plant and machinery. Interest on capital at 15% per annum as per the partnership deal. The capital is 6 lakhs for both partners. Carry forward of loss, business loss, 50,000. Compute book profit of the firm, amount of salary that can be paid to the partners. So we already know that there is an amendment in this particular provision. So we'll work out. Net profit before allowing items. That's how the question says. Reports a net profit before deduction of the following: 7,50,000 less depreciation. Interest on capital at the rate of 12%. Okay, according to section 40B, maximum interest shall be either as per deed, that is 15%, or as per law, that is 12%, whichever is less. So in this question, I'm having 6 lakhs. Four lakh 28,000 maximum permissible remuneration as per deed. As per deed, it says 25,000 per month payable to two working partners, each 25,000 each. So 25,000 into 2 into 12. 6 lakhs. As per law, the law says on first 3 lakhs at 90% and on the balance, that is 1,28,000 at 60%. Repeating, on the first 3 lakhs, so 1,28,000 into 60% plus on the, no, sorry, I'm talking the old law, sorry. As per law, okay, up to 6 lakhs. So, up to book profit of 6 lakhs, 90% of such book profit or rupees 3 lakhs, whichever is less. In this case, 4,28,000 into 90%. So whichever is less. Okay. Business law, business income of the current year. Less brought forward loss, to the extent of income. So friends, these 10 questions are more than sufficient to cover your PGBP. These 10 questions. Remember, we did first 20 questions exclusively amendments. Next 10 questions PGBP along with business income. Okay. So these 10 questions are more than sufficient. We have covered everything. You just revise it and go. It will be sufficient. Okay. Now I am going from random of all topics, some 10 questions. Random of all topics, some 10 questions, where I'll cover salary, everything. From the following details of income and losses of Mr. Raghu, okay, calculate the gross total income. Income from salaries, income from house property A and B, speculation income, non-speculation business loss, loss from owning and maintaining of racehorse, loss from agriculture in India, STCG, LTCG, lottery, income from racehorse. One thing first we have to be very clear. This is different from this. Owning and maintaining of racehorses, a normal activity, which is like a business. Whereas income from horse race is like winnings. It's a casual income. So we should not assume that to be the same. Okay. Now again, house property, salaries, speculation income, non-speculation business income. So general business loss can be set off against any income except salaries. Except salaries. Loss from owning and maintenance of racehorse to be carried forward, because unless you have income in the same head, you cannot set it off. Agricultural loss can never enter the income zone at all. STCG, LTCL can only be set off against LTCG. It is not available to be set off against. Okay. business or profession, speculation loss, okay, to be carried forward and set off only against speculation income. Maximum period 4 assessment years. This cannot be set off against any other head who is there's a loss. No, sorry, I'm sorry, I stand corrected. Speculation income. It's an income. It's an income. Non-speculation loss. That is general business loss. Okay, other than specified and speculation is general business loss, which can be set off against any income other than salaries. In the given case, it can be set off against speculation income or house property income. So I'm getting minus 1,30,000. Capital gains, STCG, LTCL. This needs to be carried forward as LTCL can only be set off against LTCG. This can be carried forward and set off against LTCG over 8 assessment years. Loss from owning and maintenance of racehorse can be carried forward and set off only against income from owning and maintenance of racehorse. Maximum period of carry forward 4 assessment years. Am I clear? Am I clear? Okay. Moving on, my dear friends. Question number 32. Mr. Amit, aged 45 years, a resident Indian, has provided you the following information. He received a royalty of 2,88,000 from abroad for a book authored by him in the nature of artistic work. The rate of royalty is 18% of the value of book and the expenditure of earning it is 40,000. The amount remitted to India is 2,30,000. Friends, there is a section 80 QQB which gives the deduction for royalty, of book. But there are conditions in that section. I will note down the conditions now, please. My dear classroom students, this question, I think we missed it in the working in the classroom also. So now I take it as an opportunity to correct, because I remember saying we'll work out, and but didn't work out this. Okay, case A, section 80 QQB, royalty income for authors. Okay, maximum royalty allowed is 15%. Maximum royalty allowed in this section is 15%. Okay, deduction will be actual royalty or rupees 3 lakhs, whichever is less. Where royalty is from outside India, then the same needs to be received within 6 months from the end of the year. These are all the conditions for claiming royalty. These are all the conditions for claiming royalty. These are all the conditions for claiming royalty. In the given question, royalty income earned, okay, at 18% is 2,88,000. Expenses incurred 40,000. Net royalty income, okay, net royalty income 288 minus 40, 2,48,000. Royalty income brought into India within 6 months. Royalty income, the question says the amount remitted 6 months is 30th, okay, 2,30,000. 2,30,000. Is the class clear? 2,30,000. Okay, please understand, out of 2,88,000, 2,30,000 is only brought into India, and 2,88,000 is 18%. Okay, deduction under section 80 QQB. Okay, 15% of royalty income that will qualify. That is if 2,88,000 is 18%, what is 15%? If 2,88,000 is 18%, what is 15%? 2,40,000. Okay. Proportionate royalty income brought into India, that is 2,30,000 divided by 2,88,000 into 2,40,000. Okay, proportionate royalty income brought into India is this much, 191, 667. This will only qualify for deduction. This will only qualify for deduction. Am I clear? Very rare case, but just remember that only 15% is allowed. If at all there is any MCQ also. Amit owns an industrial undertaking established in a special economic zone, which had commenced operating in 22-23. Total turnover, which includes 140 lakhs of export turnover, which has been received in India in convertible foreign exchange on or before 39. Profit is 20 lakhs. Oh, I thought, okay, it's a detailed question. Sorry. Anyhow, it'll work out. He was holding 30% shares in a company. Company allotted shares to shareholders on 1st October 21. The paid up share capital is 20 lakhs divided into 2 lakh shares of 10 each, which were issued at a premium of 10. He sold all these shares on 30th April 24 at 60 per share, are listed in National Stock Exchange. Amit has paid both STT at the time and the FMB as on 31/1/18 is 50 per share. Received 30,000 as savings bank deposit. Occupies ground floor of his residential building and has let out the first floor for residential purpose at an annual rent of 2,28,000. Paid municipal taxes of 60,000 for the current year. Both floors are of equal size. He paid insurance premium 39,000 for his son, who is not dependent, and 48,000 for his dependent father. Father will not qualify. Paid 42,000 for his 3 children for a school, the fees being 14,000 per child. You are required to compute the total income and tax liability under the normal provisions. Sorry, I worked out as if it's a simpler. I'll work out the total income. You read it once. Shall we? Shall we? So what are all the heads are there? IFOS is royalty, business income, and capital gains, house property, and savings bank account. Leave 3/4 of a side and start working notes. Leave 3/4 of the side and starts your working note. Okay. I will get, it's not case A, it's working note. I'm doing working notes. I'm doing working notes, friends. Okay. Working note for business income. Working note for business income. Everything should be in the working note. Okay. profit from an industrial undertaking in SEZ, in SEZ 20 lakhs. Friends, less exemption under section 10AA, less exemption under section 10AA. The industrial undertaking was started in 22-23. 22-23, 23-24, 24-25, 25. Okay, third year only. Third year only. Okay, third year only. Okay, 100% of the profit is exempt. 100% of the profit. Total turnover 200. 140 is export turnover. Profit into export turnover divided by total turnover into 100%. Friends, remember something. Whenever we are doing 35 AD, 10 AA, we need to work out AMT also later. When we are working out tax, we will do the AMT part of it also. Okay. He was holding 30% equity shares of an Indian company. Company allotted to shareholders on 1st October 21. The paid up share capital of the company is 20 lakhs divided into 2 lakh shares of 10 each, which were issued at a premium of 30 each per share. He sold all these shares on 30th April 24 at 60 per share, and he has paid STT. Okay, we don't require the 31,118 value. We don't require, okay, full value of consideration. Full value of he holds 30% equity share. The paid up share capital of the company is 20 lakh divided into 2 lakh equity shares. 2 lakh into 30%. 60,000 shares into he sold it for 60 rupees per share. 36 lakhs less cost of acquisition. Section 1112A, index benefit is not available at any time, be it before the 23rd July or after that. Indexation benefit is not available if security transaction tax is paid. Okay, since since shares are acquired after 31,118, directly we need to consider the cost, that is issue price plus premium. So what is that issue prices? Okay, the paid up share come 30% of the share or to shareholders. The paid up share capital is 10, which were issued at a premium of 30. So 60,000 into 40. Gross LTCG under section 1112A. Is it clear? Is it clear? So this is over. Yes, savings bank. I am now going to do house property. He occupies ground floor of his residential building and let out the first floor for residential use at an annual rent of 2,28,000. He has paid municipal taxes 60,000. Okay, so 50% should only be taken. Never fail to do standard deduction and all. That way, interest is not there, so only standard deduction. Come to the main part of the answer. Come to the main part of the answer. House property as computed business or profession as computed capital gains LTCG under section 112A other sources royalty income 2,88,000 less expenses 40,000 interest on savings bank account interest on savings bank account 30,000. So let me check once. He is not a senior citizen. This is over. This is over. Third information over. Fourth information over. Fifth information over. Gross total income deduction under chapter 6A. Deduction under chapter 6A. ATC. Life insurance premium on son not dependent need not be dependent. Okay, so how much is that? 39,000. Life insurance premium on father will not qualify irrespective of anything. tuition fees for two children of the assessee. Only for two children. He has paid tuition fees for three children. Only two children will qualify. QQB, 80 QQB, we have already kept it ready. 80 QQB, we have already kept it ready. TTA, savings bank interest. Clear? Am I clear? All of us? Computation of adjusted total income. Computation of adjusted total income. Section 115 JC. Total income after allowing all exemptions, deductions, and expenditures. And exemption under section 10AA. Adjusted total income. Whenever we are doing 35 AD, which we did in the last class about that sugar, fertilizer and oil. Okay, whenever we are doing 35 AD, 10AA, please remember to do this. LTCG under section 112A. First 1,25,000 not taxable. First 1,25,000. Remember that amendment is with a retrospective effect. We saw in the first class. That amendment is with a retrospective effect. So it is not taxable. First 1,25,000 not taxable. And the balance taxable at 12.5%. So our LTCG comes to 12 lakhs. Income taxable at normal rates, that is 19 lakh 47,930 minus 12 lakhs, 7 lakh 47,930. Are you understanding? 19 lakh, this is the total income taxable at special rates. This is the total income taxable at special rates. Okay, 1 minute. This is my total income part. Please unmute and tell so that I'll be able to help you out. Okay. Might not okay. Okay, not an issue. So this is my okay. So 19 7 lakh 47 930. So okay. 1947 minus our 12 lakhs minus 5 lakhs into 20% plus 12,500. Okay, please understand, 19 lakhs 47 minus 7 lakh 47 930, 5 lakhs up to 5 lakhs 12,500, more than 5 lakh 2 lakh 47 930 into 20%. Whereas on the other end, 18.5% of ATI, there is no division here, 18.5%. Assessee is liable to pay tax at normal rates or 18.5% of AMT, which ATI, whichever is higher. So he will be paying this amount. Okay, tax credit to be carried forward. Is it clear? Moving on to question number 33. Vishal, aged 33 years, submits the following information or following transactions of income. Vishal has a house in Delhi. During the financial year, he had transferred the said house to Deepika, daughter of his brother, without any consideration. House would go back to Vishal after the lifetime of Deepika. The transfer was made with the condition that 10% of the rental income from such house shall be paid to Mrs. Vishal. Rent received from such houses 5,50,000. This is a case of revocable transfer. This is a case of revocable transfer. My dear friends, section 61 of the law speaks about revocable transfer. Okay, there are two things which are known as revocable transfer: retaining right over repossession. Retaining right over repossession, which is not there in this question, because it will come back to him only on the death of the transferee. It will come back to him only on the death of the transferee. So that is not there in this question. That is not there in this question. Please understand, this is absent in this question because it is not transferable. But this one is there, retaining right over income. Retaining right over income. You can see the transfer, the 10% of the rental income will be paid to his wife. Retaining right over income, even if partial, whole of income is clubbed. Even if it is a partial right, even if it is a partial right, only 10% of the income, but it is whole of the income is clubbed. That is what is section 61, revocable transfer. I will write that in the main answer also. So this 5,50,000 is taxable. Okay. The income from during the previous year, rent received is 550. We can get 30% standard deduction. Vishal holds preference shares of a company. He instructed the company to pay dividend to his daughter, Chandini, daughter of his servant. The transfer is irrevocable for the lifetime of Chandini. Chandini receives a dividend of 450, taxable in the hands of Vishal. Why? Transfer of income. Without transferring the asset, the income is taxable only in the hands of transferor. Once more, transfer of income without transferring the asset earning that income. The income is only taxable in the hands of transferor. Vishal has a STCL of 16,000 from sale of property and LTCG of 15,000 can be set off. Balance needs to be carried forward. Other income, interest on savings bank, cash gift 75,000 received from daughter of his sister on his birthday, taxable. Only brothers and sisters or their spouse not taxable. Daughter of his sister taxable. Income from betting, income from card games, loss. Compute the total income if he has opted out of default tax regime. I don't think there is any deduction that, okay, probably savings bank interest is there. So he will get 80 TTA. This is house property. This is dividend, STCG, LTCL, savings bank, gift, everything is IFOS. So I start the question in the main itself. In the main itself, I start the solution. May I? Okay, computation of total income. Roman 1, house property. Give me a minute. Give me a minute. I need to close my Excel and open it. Give me a minute. House property. This will be taxable in the hands of Vishal. This will be taxable in the hands of Vishal as Vishal retains right over income. Further, transfer of asset to any person, beneficiary being spouse or daughter-in-law. The whole of the income is only taxable in the hands of transferor. Section 60 read along with section 61. Please write down neatly. Sorry, section 64 read along. Section 64. Section 60 henceforth only I'm going to do. Section 64 read along with section 60. Even if you don't remember the section number, just read the provision, that is enough. No business or profession, directly capital gains only. Short-term capital loss is 16,000, LTCG is 15,000. Dividend from preference shares. According to section 60, transfer of income without transferring the source of such income, the transferred income is taxable only in the hands of transferor. Please understand, if I want to really benefit the other person, I should have transferred the preference shares itself to the other person. Only transferring the income will not work. Okay, the transferred income is taxable only in the hands of transferor. So Dividend received 4,50,000. He's not a senior citizen, no. Am I clear? I don't think the question has asked for tax. Compute the total income. Question number 34. Mr. Sunil, a resident Indian, has furnished the following particulars. He occupies the ground floor of his residential building and let out the first floor at an annual rent. He had paid municipal taxes. Both these are equal size. As per the interest certificate, he paid 1,50,000 as interest and 80,000 towards principal. If he is following the concessional tax regime, he cannot claim this 80,000 ATC, and this is for the whole house divided as 75-75. He owns an industrial undertaking which has commenced operation in 2021. Total turnover includes 150 export turnover. Out of 150, 120 only is received in convertible foreign exchange. The industrial undertaking fulfills all condition. Profit 40 lakhs. Remember, we should also do AMT. He employed 20 new employees for the said industrial undertaking. Out of 20, 12 were employed from 1st May at an emolument of 18,000 and remaining from 1st September at an emolument of 12,000. All these are in recognized participa and paid emoluments in their bank account. He earned interest on savings and fixed deposit. He is not a senior citizen, I believe. Yeah, he is not a senior citizen. He sold his vacant land for 15 lakhs. The stamp value of the land was 16 lakhs. The land was acquired in 98 and FMB. Okay, and stamp value on that date. He had incurred registration charges 12,000 at that time. He paid insurance premium 40,000. Who is done? You are requested to compute the total income and tax liability in the manner that he can make maximum tax savings. Read through. It's a very, very good question, especially tax liability. We are going to have a very interesting aspect of this LTCG indexation, non-indexation aspects. Okay, right. Let's go headwise and keep computing. Leave one side and come to the working notes. Okay. Self-occupied part, let out part. Self-occupied part, let out part. Okay. Rent received. less MT paid. He has paid municipal 25,000. Net annual value for a self-occupied property nil. Here it is. Standard deduction at 30% of NAV. Section 24A. Interest on borrowed capital. Okay, interest on borrowed capital 50% per unit. So here it will be 75,000. Here it will be 75,000. Income or loss from house property. Okay, where assessee follows new tax regime, self-occupation interest cannot be claimed. Hence, income will be 122,750, where assessee is under normal tax regime, is under old tax regime, then self-occupation can be claimed. So what happens is 122,750 plus 75,000 minus 75,000. Okay, total profit of unit in SEZ. Total profit of unit in SEZ. This information is over. This information is over. Total profit of unit in SEZ 40 lakhs. Less exemption under section 10AA 40 lakhs, that is the profit, into 120 lakhs money brought into India within 6 months. Always remember, export turnover does not mean actual export turnover. Value of goods exported is not export turnover. Export turnover means money brought into India within 6 months from the end of the year. That is only 120 divided by total turnover is 400 into 100%. If assessee is under new tax regime, he cannot claim, okay, 10AA. Hence, business income will be actual consideration 15 lakhs. 110% of actual consideration, stamp value 16 lakhs. Since stamp value does not exceed 110%, actual consideration will be treated as full value of consideration. So only if stamp value exceeds 110%, you will take that. Otherwise, you will take the actual consideration as full value of consideration. Actual consideration will become full value of consideration. Is it clear? Is it clear? Okay. So this is over. Okay. This is 80C. We already have an 80C. We already have an 80C. We already have an 80C. And this is for 80JJAA. This is for 80JJAA. 80JJAA has the following conditions. The salary should not exceed 25,000. The employee should covered under PF. The employee pay salary should be paid by approved modes, and they should have worked for 240 days. In this, 12 employees were employed from 1st May, okay, 240 days. But whereas this remaining were employed from 1st September, they will not, 1st August only is 240 days. Okay, unless it is a seasonal industry, you cannot take it. Seasonal industry is nothing but leather and diamonds, so leave that. So only 12 employees will qualify for 80 JJAA. Okay, this is over. He earned the interest 30 and 40 on savings and fixed deposit. Okay, so I will go to the main answer working. I will go to the main answer working. I am doing both simultaneously. Normal 115 BAC, normal and concessional tax regime 115 BAC. House property, here we have worked out both and kept it ready. Here it will be 47,750, whereas here it will be 122,750. Business or profession, here it will be 28 lakhs, whereas here it will be 40 lakhs. Capital gains, LTCG on sale of immovable property, other sources, saving interest on savings deposit is 30,000, interest on FD is 40,000. This information is also over. Gross total income, deduction under chapter 6A, deduction under chapter 6A, deduction under chapter 6A, 80C, principal repayment is coming to 80,000. Principal repayment of house property 80,000 plus insurance premium on son need not be dependent comes to another 40,000. Okay, so 80,000 plus 40,000. Remember, I cannot claim it under concessional tax regime. I cannot claim it under concessional tax regime. Now for 80 JJAA, employees who have completed 240 days, whose salary not exceeding, okay, 25,000 per month will qualify. Okay, will qualify. So in this case, 12 employees into out of 18,000 per month into 11 months. from me, okay, into 30%, into 30%. Repeating, 12 employees, each employee eligible for 18,000 per month, 11 months into 30%. Interestingly, this can also be claimed under concessional tax regime. 80 JJAA. Remember, my dear friends, 80 CCD. Sorry, friends. 80 CCD subsection 2, 80 JJAA, okay, CCH also. These three can be claimed even under concessional tax regime, even under concessional tax regime. So, my total income okay, okay, remember this. Adjusted total income under section 115 JC will be 31 lakh 84,950 plus 12 lakhs, right? Plus I claimed 12 lakhs. 12 lakhs of section 10 AA. May I? May I? Now I want the class to clearly understand about this capital gains. At the time of computing tax, I have two options. Okay. Before going to tax, working note for capital gains tax. Assessee is an individual. Asset sold is immovable property. Assessee is an individual. Asset sold is an immovable property. LTCG without indexation benefit. We all know LTCG without indexation benefit 11 lakhs. 11 lakhs. Okay. Tax at 12.5%. LTCG with indexation benefit, tax at 20%. Now, please understand, ICOA, indexed cost of acquisition, will be 4 lakhs. Am I right? 4 lakhs is the stamp value. Am I right? 4 lakhs into 363 by 100. Okay. 4 lakhs into 363 by 100. Okay. Gross, taxable LTCG will be, what is that sale value? 15 lakhs minus 14 lakh 52,000. Okay. 15 lakhs minus 14 lakh 52,000 on this 20%, which is beneficial. 9,600 is beneficial. 9,600 is beneficial. Okay. Hence, assessee should avail the benefit of indexation at the time of computing tax. Am I clear to you? Do it as a separate working note and keep it so that you are more clear. Now, I want the class to be more clear, more clear, more clear. Please understand. Computation of tax. Okay, for a minute, please understand, then you can take over. Particulars, normal, AMT 115 BAC. Okay. Okay. Tax on LTCG. We all know we are going to take 9,600. We are going to take 9,600 tax on LTCG. Okay. Tax on normal income, which is nothing but, okay, 31 lakh 84,950 minus 11 lakh of LTCG, minus 11 lakh of LTCG. Please remember, this 11 lakhs is already taxed. This 11 lakhs is included in this 31,84,950. So I have already taxed. I found that it is more beneficial to me to take the indexation benefit. So I have already completed that. So this 31,84,950 minus 11 lakhs comes to, okay, some 20 lakh 84,950. Some 20 lakh 84,950. On that, I am working out in the normal manner. Okay, 20,84,950 minus 10 lakhs into 30% plus 1,12,500. This will be my tax. Tax on, okay, 115 BAC income. What is the 115 BAC? 45,79,950. 45,79,950 minus 11 lakhs. Okay, gives me 34,79,950. On this, the tax, I'm working it out. I'm again calling the shots. Minus 11 lakhs minus 15 lakhs into 30% plus 1,40,000. Okay. 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 Please check it out. Okay. 18.5% of ATI. This is directly I need to do on this. Here there is no LTCG, etc. Okay. Total base tax. And HEC at 4%. My dear friends, seemingly it will look like this is simpler, so I can pay this. But on the other hand, if I pay this, the difference between these two, I can carry forward it as tax credit. I can carry forward it as tax credit and can be adjusted in the future years. So that will be more beneficial, because net I am going to pay 4,65,000 only. Net time, the remaining is going to be carried forward as tax credit instead of paying. But on an overall cash flow basis, people will say 115 BAC is better, because instead of paying 8,43,000, I am only going to pay 7,73,000. Am I clear to you? Am I clear to you? Okay. Where normal tax system is followed, assessee is liable to pay whichever is higher among normal tax or AMT. Difference can be carried forward as tax credit. So for 15 years, you can carry forward and adjust it. Well, okay, this is one option, but normally the assessee will feel cash flow is better. So I will go by 115 BAC. Rare question, but LTCG is going to be a sure short question. Sure short question, LTCG is going to be.
Sir,
Yeah, go ahead.
sir,
Yeah, listening.
sir,
Are you not able to listen to me?
sir.
Yeah, yeah, Sneha. Tell me, Sneha.
ஐஎஃப்ஐஎஸ்ல ஒரு டவுட் சார். நேத்தி சம் பார்க்கும்போது ஒரு கொஷின்ல கார் கிஃப்ட் பண்ணியிருந்தோம் அப்படின்னா அது கேபிட்டல் அசெட் கிடையாது, அதனால அது டாக்ஸபிள் கிடையாதுன்னு போட்டிருக்கோம்.
ஆமாம்.
அப்படியா? இப்போ ஆக்ட்ரஸ்க்குலாம் கார் கிஃப்ட் பண்ணாங்கன்னா அவங்க டாக்ஸ் பே பண்ண வேண்டாமா?
Yeah, let me tell you, for actor, actress, okay, I take that doubt as a common doubt and answer this. Okay. Okay, so gift of car. Okay, not a specified capital asset, specified movable asset, not a specified movable asset. Okay, to tax under gift, it should be a specified movable asset. It is not a specified movable asset. Okay, receiver is not taxable. But if it is related to business or profession, a patient gifting car to a doctor, a client gifting car to a lawyer, a producer of the film feels that the film has performed well and gift a car to the actor or director or the music director. In this case, it will be taxable because it will be taken as perquisite for carrying on business or profession. This will come under section 28, Sneha. This will come under section 28 and it will become taxable. For a normally, if you get a car as a gift, it is not taxable because you are a receiver not carrying on business or profession. Suppose if I, the chartered accountant, a client gift me car, somebody else gift me car, not taxable. Suppose let us take a student gift me car, not taxable for me because it comes under IFOS. In IFOS, it should be a specified option. Whereas A client gift me car because I'm carrying on business or profession, it will become taxable because it will be any benefit or perquisite received on carrying on of business or profession. Am I clear to you?
Yes, sir.
Suppose Aziz is a doctor and we have to compute depreciation for medical equipment. Rate 15%. 15. Jan 25 40%. No. Medical equipment. Medical equipment. Yeah. Medical equipments are because surgical equipment, all these things are coming under plant and machinery, and it will be only 15%. Let's do a salary question again. I'll check it out in the break, Raja. I'll check it out. Priyanka, General Manager of ABC Limited, Mumbai, furnishes the following particulars. Salary 40,000 per month. Medical facility in the hospital owned by the employer, not taxable. Medical facility in a hospital owned by the employer. RFA, housing loan 7 lakh given at the rate of interest at 6%. The rate of interest as per SBI norm is 9.5%. A dining table was provided at a resident. This was purchased by the company and sold to Priyanka on 1st May. Personal purchases through credit card amounted to 10,000 paid by the company. A Maruti Suzuki car was purchased by the company and sold to Priyanka for 160. Other income received, interest income of interest on FD of a minor married daughter will not be clubbed. Minor married daughter will not be clubbed. Deposit in PPF 40,000. Compute GTI if she exercised the option of shifting out of 115 BAC. So, looking into the question, salary 40,000, fully taxable. Medical facility not taxable. Rent-free accommodation 10%. Housing loan 7 lakhs given, so interest. Dining table was provided at her residence. So there are two perquisite in this particular statement. There are two perquisites in this particular statement. For 1 month, it is used by the employee, and on 1/5 he get it transferred. She gets it transferred in her name. Credit card bills, Maruti car transfer, other incomes, okay, 80C, okay, compute the gross total income only. Leave half a page, come to working note for salaries. concessional interest loans. Okay. Okay. Interest taking SBI rate. Okay. Right. Concessional interest loan directly I will work out. Okay. Loan into benefit received. That is difference between SBI rate and rate by employer. So it's for the entire 12 months because he got the loan on 1/4/24 itself. 7 lakh into 3.5%. That is 9.5 plus 6. Okay. Okay. Usage of employer's furniture in the residence of employee for 1 month. On 1st May, it gets transferred to employee. So only for 1 month, that is April, employer asset used by employee. So what happens is 60,000 into 10% into 1/12. Okay. Okay. Personal, okay. And then transfer of furniture. Purchase value 60,000 less depreciation at the rate of 10% SLM. It's other asset. Remember, electronic equipments 50%. Diminishing balance method. Motor car 20%, which we will work out very soon. But here furniture is other asset. It is purchased on 21. One say 22, 23. Only for 2 years. Only for 2 years. The third year is not completed. Okay. The third year is not completed. For 2 years. That is 22 and 23. Okay. Only if the year is completed, depreciation can be provided. So in this case, only for 2 years. Okay. So the value is any value recovered and sold at 30,000. Clear? Okay. Right. Okay. Credit card purchase. Okay. Perquisite value of personal expenses of employee met by employer 10,000. 10,000. Maruti car was purchased on 16/7, transferred on only 1 year depreciation I can charge. Okay. Transfer of Maruti car. Okay. Value on date of purchase, that is 16/7/22. gross salary standard deduction assessee is in old tax regime, that is opted out of default tax regime, so 50,000 only. If it is new tax regime, you would have got 75,000. Computation of total income. Come to the main answer. Computation of total income. Salaries as computed. Other sources. Interest on FD 7,000. Interest on mutual fund 3,000. Interest income of minor married daughter will not be clubbed. Will not be clubbed. Gross total income deduction under section 80C, deduction under section 80C, PPF deposit. Huh? Compute the gross total income. Okay. I just complete it. I accept. If they have asked for gross total income, we'll stop there. You cannot get 80 TTA because there is no savings bank interest. Clear? Clear? All of us clear? Question number 36. Mr. Asif purchased a vacant land for 80 lakhs. Registration and other expenses 10%. He constructed residential building in 7/8 for 1 crore. He entered into an agreement for sale of the above residential house in July 24. The sale consideration was 6 crores on the date of agreement. Asif received 20 lakhs as advance in cash. Advance received in cash. The stamp duty on that date was 620 lakhs. The sale deed was registered on 10th Feb for the agreed consideration. Stamp duty on that day was 670 lakhs. 1% of sale consideration was paid as brokerage. Investment in NHAI bonds 45 lakhs and 15 lakhs. Compute the capital gain for the assessment year. Read through. A detailed understanding of section 50C will help us. Okay. Full value of consideration by applying the provisions of section 50C. Actual consideration, he entered into the agreement for sale of the above, not a relative. The sale consideration was fixed at 6 crores. 6 crores. Okay. 110% of actual consideration. Stamp value on the date of registration as advances received otherwise than by approved modes. Please remember, if the advance is received by approved modes, I will take it on the date of agreement or date of booking. But since advance is received otherwise than by where advance is not received or advance is received otherwise than by approved modes, I need to take the rate of registration, which is 670 lakhs. Since stamp duty exceeds 110% of actual consideration, stamp duty becomes full value of consideration. Less. Okay. 1% of actual sale value. Brokerage will not be paid on stamp value. It will be actual sale value. Cost of acquisition. Cost of acquisition. For land, 88 lakhs. 80 lakhs plus 10% expenses on that date. For building, 100 lakhs. gross LTCG. Registration happened in Feb. They have invested in May and July. Huh? Eligible, yeah. 45 plus 15 lakhs. Since assessee is an individual, sale is immovable property. At the time of computing tax, assessee may opt for paying higher rate of tax by applying indexation. See, if the question asks you what is the capital gain, stop the answer here. Only if they ask you to compute tax, you will go for that option. I am going to go and prove you, tell you how it works. But if the question asks you just to compute tax, stop here. Okay, I am working, okay, where indexation benefit is availed. ICOA of land will be, my dear friends, 88 lakhs into 363 divided by, the question itself says 78, no, 56117. ICOA of building, gross LTCG will be this minus this minus this. Exemption will be 50 lakhs. Taxable LTCG will be this minus this. Okay. 12.5% of taxable LTCG without %20 of taxable LTCG with okay, you will go for the second option. You will go for the second option. 37th question, again a salary question. Mr. Sailesh is a marketing manager in Smile Limited. From the following, you are required to compute the total income chargeable under salary. Basic, DA, insurance, he is provided with health insurance, received 10,000 as gift voucher on the occasion of marriage anniversary from Smile, also received 25,000 from the employer on wedding of his sister. Smile Limited allotted 800 sweat equity shares. The shares were allotted at 450 per share when the fair market value is 700. Provided with furniture, the furniture used as his residence for his personal purposes, actual cost. The company offered the furniture free of cost, no amount was recovered. Received 10,000 towards entertainment allowances. Housing loan 4.5%. Amount outstanding is 15 lakhs. 50,000 every quarter is paid towards principal. The lending rate as per SBI is 8%. Facility of laptop is provided. Silage sold jewelry on 16th November. He had originally purchased it for 15 lakhs and made addition of 5 lakh. Using the sale proceeds, he purchased a new house and registered it in March for 60 lakhs when the stamp value is 70 lakhs. Actually, the question asks for gross salary, but let's do gross total income. Let's do gross total income. The 10th adjustment is very interesting. Read it. Question number 37. I do small working notes, 2 small working notes before going into working note for salary. Okay, leave some half aside, leave some half aside. Let me do some 2 or 3 working notes before going into salaries. Working note for interest, concessional interest loans. Housing loan at 4.5% is provided, and it was 15 lakhs is outstanding. 50,000 is paid every quarter starting from June. Every quarter towards principal starting from June. It should be July, right? June. I'll take it as June end. Okay, I'll take it as June end. Okay, 15 lakhs at 3.5%. That is the concession into 3/12. $14,50,000 into 3.5% into 3/12. $14 lakhs. Am I clear? Okay. Working note for transfer of furniture. Actually, I'll go for salary. Working note for taxable salary. Working note for taxable salary. Let me do that there itself. Okay. Health insurance assumed to be group insurance or personal accident policy, hence not taxable. You can have the alternative assumption also, saying it's a personal insurance and take it as a monetary benefit given to an employee, non-monetary benefit given to an employee. I have taken it as group insurance or personal accident policy, which are not taxable, which are not taxable. Oh, sorry. On that, then this, this, this give notice there. Thanks for correcting. So for furniture, it is 10% straight line method and it is done for 4 years, 21, 22, 23, 24. After 24, you cannot claim, even though it is transferred only on March 25. You cannot claim it because year has not been completed. Is it clear? Okay. Okay. I'm still in the working note. I'm going to do capital gains. Silage sold jewelry 7540, originally purchased for 15 and 5. Using the sale consideration, he purchased a new house for 60 lakhs. This is that 54F. Cost of acquisition per sold after 23rd July. So no indexation benefit. So 20 lakhs, I believe. 15 plus 5, 20 lakhs. Gross LTCG. Less exemption under section 54F. Exemption under section 54F. Gross LTCG into amount invested divided by net consideration. Gross LTCG into amount invested. He purchased and registered a new house for 60 lakhs. 55 lakh 40,000 into 60 lakhs divided by 75 lakh 40,000. Okay, once more, this into 60 lakhs divided by 75 lakh 40,000. Taxable LTCG. Taxable LTCG is, I can round it off to, I can round it off to 1131,510. Note, okay, asset transferred is jewelry. Hence, no question, no option of indexing and paying lesser tax. So you have to pay 12.5% of 1131,510. And I want the class to focus once more again to understand the beautiful nuance of this question. Okay. The beautiful nuance of this question. He has purchased a house for 60 lakhs when the stamp value is 70 lakhs. We call it as inadequate consideration. This is the beautiful nuance of the question. There is an inadequate consideration inbuilt in that question. Okay. Immovable property purchased. How much is that? 60 lakhs. 110% of purchase price. Stamp value 70 lakhs. Stamp value exceeds 110% and the inadequate consideration exceeds 50,000. Hence, the whole of inadequate consideration is taxable under 56 subsection 2. That is nothing but gift provisions. So 70 minus 60, 10 lakhs. This is an interesting nuance in this question. Akka clear? Mr. Akshay, a resident individual, provides the following details of his income or losses. Salaries computed, rent received, repayment of loan taken for of the above property. Loan was taken from a friend. This repayment includes payment of interest 7 lakhs. Rent received on house property located in Jaipur. Interest on loan taken for repair of the house property situated in Mumbai and Delhi. The property in Mumbai is self-occupied. Loan was taken and utilized in the ratio of 50:50 for house property in Mumbai and Delhi. LTCG, interest on FD, loss from textile business, speculation business profit, lottery income, loss incurred by the firm in which he is a partner, salary received as a partner of a firm. This is allowed in the hands of the firm. Life insurance premium paid for his son and is working in USA. He has the following brought forward losses. Brought forward STCL, brought forward STCG, STCL, compute total income and the amount of loss that can be carried forward. Mr. Akshay has opted out of the default tax regime. Read them. STCL can be set off against the LTCG. Vice versa is not possible. Loss incurred by the firm has nothing to do with the partners. The firm only needs to carry forward it. The firm only needs to carry forward it. I'm reading this rental income part of it. Okay. He has 3 houses. Okay. Rent received for Delhi house, Jaipur house. Okay. Repayment of loan for above house. Okay. The loan was taken from his friend. Rent received on Jaipur house, interest on loan for repairs of house property situated in Mumbai and Delhi. Actually, it should be Mumbai and Jaipur. Mumbai and Jaipur. Please change it to Mumbai and Jaipur because Delhi is already covered. So this should be Jaipur. The property in Mumbai is self-occupied and utilized in the ratio of 50:50 for house properties of Mumbai and Jaipur respectively. First, I will do the working note for house property. Let out, self-occupied, let out. Rent received 5 lakhs dash 3,20,000. Okay, standard deduction under section 24A, 30% of rent interest on borrowed capital. Okay, interest on borrowed capital. Okay, interest okay paid to a friend will also qualify. In other words, for interest it need not be recognized financial institution. Am I clear to you? Even you can pay to a friend, still claim the interest as deduction. Even you can claim pay to a friend. In this case, 15,25,000 includes payment of interest 7 lakhs. Here, okay, interest on loan taken for repairs 75,000. Interest on loan taken for repairs in the case of self-occupied property restricted to 30,000. Remember, if he is in default tax regime, that 30,000 cannot be claimed. That 30,000 cannot be claimed. If this is clear, we will proceed. I'm progressing. Now I have salaries. Okay, and now I'll write a note here for our understanding. Note, the principal repaid will qualify for 80C provided it is repaid to and recognized financial institution. In this case, it is paid to a friend, so it will not qualify. Am I clear? Am I clear to you? Okay. For interest, you can claim 24B allows you, whereas 80C says it should be paid to a recognized financial institution. Okay. So any other working note required? Not required. I'm going to the main answer. Roman 1, salaries as computed. Roman 2, house property. I want you to understand. The whole of the loss cannot be set off. Only to the extent of 2 lakhs needs to be set off. Balance needs to be carried forward. Repeating, house property loss to the extent of 2 lakhs can only be set off. The balance needs to be carried forward. So this is minus 31,000 to be carried forward, minus 2 lakhs that can be set off. loss from textile business 750, speculation business profit, and remember, salary received is also business or profession. Salary received from a firm is also business or remuneration, and interest received by a partner from a firm is taxable in the hands of the partner under the head business or profession. Under the head business or profession. Speculation business profit is 2,30,000. Remuneration from a firm as a partner. Yes. Loss from general business. This can be set off here to the extent of whatever is available. It cannot be set off against the salary. It cannot be set off against the salary. So the remaining loss needs to be carried forward. I'll complete the other aspects and write about it. I leave one line. Capital gains. LTCG on sale of equity shares. 7,95,000 less brought forward or current year. Anything is there? This is over. 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 Less brought forward. STCL on jewelry. 275. Friends, this can now be taken to the outer column because it can be set off against the capital gain. Okay, this can be set off against any income other than salaries. Since capital gain is available, this can be set off against the capital gain. Am I clear? Am I clear? Okay. Okay. Right. We'll complete the two other questions. Okay. We'll complete the two other questions. It's very simple now. I'm just completing with a residential status. Mr. Akash, an Indian citizen, aged 45 years, worked in a Delhi company. He got a job offers from California on 1/6/23, left India for the first time on 31/7 and joined that company. During the year, he visited India from 25/5 to 22/9. During the stay, he married Geeta, who also left India on the same day along with him. He has received the following income: salary from the Californian company, dividend, agricultural income from outside India received there, rent received or receivable from house property in Delhi, profit on business in outside India which was managed from India, income of his wife, income from latex lumber, income from coffee grown and grounded in Colombo, income from tea in West Bengal, tree samplings. Determine the total income of Akash and Geeta. Read through. Okay. Determination of residential status of Akash. Determination of residential status. Period of stay in India during the financial year 24-25. He comes on 25th May to 22nd September. So 6 days in May, 7 days in May. That is 25, 26, 27, 28, 29, 30, 31. 7 days in May. June, July, August, September. 121 days. 121 days. One 21 days. Am I clear? Okay, keep this, leave 2 lines. Computation of income taxable in India for Akash. Salary, dividend from Indian companies, 5 lakhs. Rent from properties in Delhi, profit from business outside India managed from India, profit from please wait, understand in this case. Okay, it exceeds 15 lakhs. Okay, it exceeds 15 lakhs. So what happens? Please understand. Period of stay 121 days. Okay, he is an Indian citizen, visiting India. First basic condition not satisfied. Not satisfied. And second is not applicable as the income exceeds 15 lakhs. Hence, he is a non-resident. Wait. Hence, he is a non-resident. Now, not taxable since he is a non-resident. So, his income will be 10 lakh. For computing that Indian income, whether it exceeds 15 lakhs, Indian income, whether it exceeds 15 lakhs, I will take the 6 lakhs. Oh, 1 minute. Did I do a mistake? Yeah. Oh, sorry. He is a RN1. Okay. Sorry. And second is, and the second basic condition is applicable. Sorry, is applicable as the income exceeds 15 lakhs and he has stayed for 121 days. Hence, sorry friends, provisions of RNOR is applicable. Even though he is a non-resident, since income, I missed it as less than 15 lakhs, more than 15 lakhs. So provisions of RNOR is applicable. Okay, he should not stay more than 120 days. Am I clear? Determination of residential status of Gita. Determination of residential status of Gita. Okay. Period of stay in India during financial year 24-25, 1st April to 22nd September. Okay. April, May, June, July, August, September. She is not going for employment purposes. Hence, she satisfies the second basic condition. Hence, she satisfies the second. Are you understanding? She satisfies the second basic condition. Okay, she is an ROR. She is an ROR. Okay, my dear friends, in the case of plantation sector, tea, coffee, rubber, a part of it is agricultural income, another part of it is business income. Okay. Are you clear? I'm going to the last question of our random workings. Mrs. Sia D'Souza is an American, got married to an Indian in New York on 14/2/24 and came to India on 18/3/24. She left for Australia on 16/8/24. She returned again to India on 23/3/25. On 1/4/24, she had purchased an apartment in Mumbai, which she was let out for to Mr. Samir on a rent of 26,000 from 1/6. She had taken a loan from Indian Bank for purchase of this and charged 205 as interest. While in India during the previous year, she had received a gold chain from her in-laws worth 150, 165 from a very close friend of her husband. From the information, you are required to determine her residential status and compute the total income, assuming she has shifted out of the default tax regime. Question number. Okay. Determination of residential status of Sia D'Souza. Stay in India during FY 24/25. She left for Australia on 16/8/24. 1st April to 16th August 24. So April, May, June, July, and August. And then she came back on, okay, she returned on 23/3/25. 23rd March to 31st March. 9 days. So her stay is 139 plus 8, 147. She got married on and came to India for the first time. She has, okay, she does not satisfy any of the basic condition. Okay, hence she is a non-resident. Hence she does not satisfy any of the basic condition, so she becomes a non-resident. House property, rent received, she has let it out from 1st of June at 26,000 per month. 26,000 from 1st of June, so 10 months. Okay, for 10 months she has let it out. There is no municipal taxes as such given. Okay, she had taken a loan, so directly standard deduction at 30% under section 24 clause A, and interest on borrowed capital. Okay, I think she has taken a loan on which bank charged 2,05,000 directly provided, and it is what I would say as self let out property, so whole of the interest can be claimed as deduction. She has a loss, and that's why they have said she has shifted out of the default tax regime, which means the loss can be set off against other income. She has other sources, gift from in-laws, exempt, gift from friend, taxable, am I clear to you? Okay. My dear friends, these 40 questions are more than sufficient for you to take up anything. It will maximum take half a day to work out all the 40 questions. Half a day, not more than that. You have 2 days of holiday between, 2 days between your previous examination completion, law exam completion and income tax. I have planned the material in such a manner that you spend half of the time for IDT, half of the time for DT, you will be able to complete this. Am I clear to you? Okay. Okay. Just prepare these things. More than sufficient. More than sufficient. Any doubts you have, always I'm available on a voice note or on a message. Okay. Meet you after your examination. All the best, friends. Thanks for patiently waiting for the revision, because in between I had some other classes. There were a lot of confusions here with regard to the many faculties took off. So I was asked to go to some other classes. That's why. Meet you in the next week. Meet you after your exams. All the best.